What's up everybody, Tom here with another video. In today's video, we'll be discussing our technical analysis levels together for the S&P 500, Nasdaq, Bitcoin, gold, Tesla, and more. Yesterday, it's got to be said, was the day of Tesla regaining bullish control. Let's talk about that and more right now. Stay tuned. Okay, everybody. Well, as we like to do for our recap here for the 23rd of June 2021, we'll have a quick look at the S&P 500 heat map of large companies. And it's clear to see there was one that was above all others, and that was the lagging Tesla trade, 5.27%. Now, we've been talking as a community about how that's been improving recently, and of course, we had our 635 level that once we broke above there, we were going to see some pretty strong bullish pressure. We'll talk about that very, very soon, but it was great to see finally some movement on Tesla. For Tesla traders, oh, wow, it's been a while. It really has been a while. Let's have a quick look here at the actual sectors and indices. So the indices first, we saw big movements in the IWM, the Russell 2000. It went up to almost 0.9% up, then fell off near the end of the day. And most other sectors and indices pretty much just kind of stayed flat and around. You saw that in the heat map, really. Look at all these, very tight band for every single one of the sectors, less than 1% each way. Usually you have like a standout either way, 2% or at least 1.5%, and that just did not happen. So there was no real action yesterday except for the hyper stocks, except for Tesla and of course the dollar index as well. So if we actually go over here to the US dollar and start our technical analysis, it's interesting. I mean, it didn't quite get back down to the 91.40 level. It was right very, 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 very close to it. And then this is where we expect the resistance to become support and for buyers to regain control. Now, I think a lot of this has got to do with the Fed really putting in this idea of mixed messages. So we don't have a clear message coming in from the Fed and what they want to do about inflation and whether they're concerned about inflation. They say, yes, we are. No, we're not. It's mixed and muddled. And this happened again back in 2012, 13, 14, 15. They didn't really know what to do because they're in a predicament. They know this, and therefore they're just like kind of trying to give mixed messages, I think, to kind of disrupt the market, but not to scare it. It's like, we will do this, but then we may not do this. So, it's okay. And then everyone's confused. So the market goes up. So it seems like a logical strategy. I just wanted to bring up the odd US dollar here just to show you why that dollar index may have turned earlier. So you can see here the odd US dollar hit a level that we were looking at yesterday. And this is a previous kind of support level. It's becoming resistance. And this is going through many of the currency pairs. We don't often look too much at the currencies on the channel, but I just want to show you the importance of what happened, where the dollar index is, and those types of things going on in the markets. If we go over to gold, which is of course heavily manipulated by dollar index movement, you'll see gold had a go at getting through that resistance. It is putting in the structure. It's putting in the zone that we want to see. It's happening at the 1761, which is exactly what we want. So if we breach that 1800, I'm kind of feeling that we are back in a bull movement here on gold. But you know what? If we breach below 1761, then of course we're probably looking at further shorting pressure. And this all comes down to understanding the top-down analysis that we talk about on this channel. It's all got to do with the resistance becoming support. And if we think about it, resistance, support, support, resistance, support. So really what's happening here is it's just the exact same level that's being very common, very well used for quite some time. And that's exactly where we're at with gold. So no direction just yet. Silver, I'm going to go with gold, giving us the true direction. And then silver, if you want to take it, will move along with the gold trade. So this one here also very lackluster at this point, trying to structure up, but looks kind of sick when you compare it to the gold chart. It really doesn't do anything at all. Let's move over to the stock markets now. We'll start with AMC. And AMC is in a great little channel. We've got resistance at the peak here around 63.22 with the closures. And then we've got our support at 52.35. We had really basically a flat to nothing day, even on the squeeze stocks yesterday. AMC, GME didn't do very much. And it remains in a trap channel. So if we break to the upside, we have our target. If we break to the downside, we have our target. It proofs. This one proofs pretty much with the peak. So that's a good sign. And what we mean by proofs is that the market is going and it's predicting that it's going to go to these key levels. Now, if there's already been a key level of support buying before or resistance selling before, and the market's predicting with a pattern that's going to go in that direction, that gives us extra strength to the trade. So it's really, really cool to see that type of thing. And AMC certainly is setting up that way. Now, the best trade yesterday, or one of the best anyway, Tesla. Wow, good work, guys. You finally pushed it through. You finally got some action here. And we did start to talk about how things were looking better. And it all came down to the daily and just this series of slightly nicer closes. We theorized that things were improving. Number one, we had our trend line up, which is a series of high lows. We saw volume slightly improving. And at the same time as it was slightly improving, see how we get a closure above all other closures. This is a gap up, sell off. This is a closure below, and this is a closure at the new peak. Then we have a long leg doji, and then yesterday we snapped the 635. But it comes down to more than that. We've been talking about the 660 level, the 666 devil number for quite some time being the next resistance for Tesla. And there are a lot of reasons why. If we go down to the 4-hour chart, you'll see all the buying pressure that came through this 660 area. But you know what I'm most happy about? It looks like we just put in place the first bullish closure above the downward trend line. And that's a big deal. Because if we get something like, okay, it goes to 666, something like this, pulls back down to this level, what's going to happen then? We're going to be intersecting with previous resistance, which becomes support. Moving averages, 50 exponential will be there, 20 will be there by that time. So 2 moving averages will be there as support. And we also have our backup trend line in terms of the higher lows coming through just underneath it. So we're now starting to form a decent bullish case here for Tesla. If we go over to something like the weekly as well, and we think about this chart and what's happening with it, well, it's also going to be a monumental close for the week. If we finish the next 2 days bullish, we'll be through this downward trend line and starting to put in the repair. And we've talked about how price action repair is the most important thing to understand the markets when you're talking about being closer and understanding before everybody else starts talking about it, that actually the market is about to move up and it is about to do a very, very nice move. So where's the next level after 666, 660 for Tesla? Well, it's going to be, of course, 700. After that, it's going to be 750, 760, and then, of course, 800. So we have some very clean levels coming forward. This is a big bullish breakout. I'm excited for you guys. Hopefully it can come back. And, of course, for anyone that watches our live streams, hopefully Harry comes back as well, as he is probably the number one Tesla bull that we have in the rooms. Let's go over to the US 100, the Nasdaq, and start with the indices. So another little grind. Long leg doji on the daily here on the futures contract. You can see that there was basically nothing much going on throughout the day. It kind of just tried to get higher, and I think a lot of that's got to do with it's barely pushing through here, this top trend line. Now, some people are saying, oh, this is resistance and it's failing here. At this stage, I'm seeing really that the Nasdaq is just going to keep grinding higher. I think at the time of the recording of this video, we're up about 0.2% on the futures market coming into the US. So yeah, I think that this is just grinding higher. It all comes down to the weekly and the fact that we're not hitting the top end of this ascending channel. So we've got great support here on the QQQ, the Nasdaq. Support, 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 resistance, resistance, resistance. And, you know, I'm just looking for this. I'm hoping it can happen. I really am. So if we can get back up to these levels, like a 365 on the QQQ, 347 at this time of recording, if it can get through to this level, do I think there's going to be selling here? Yeah. Do I think that it's going to happen sometime in July? Makes sense. And if that does occur, then we're also going to probably have a pretty poor breadth of market, which means that not all companies will be rising. It'll be basically just biotechnology, technology, consumer discretionary, healthcare, those kind of areas. And it may not be materials, it may not be energy anymore, and all those types of things. So remember, health of the market when it hits this peak is going to be an important factor to how we trade and how we interpret the markets moving forward. But I like this chart. I think that looks pretty damn beautiful at this stage. Let's move over to the S&P 500. It continues to kind of struggle here to get through the peak. As of the time of this recording, the futures are actually right back up at these resistances here. They're about 54, I think, and it's not 41 anymore. But you can see it's struggling around the resistance, and it makes sense. This is an all-time peak high. There are going to be bears here. Why wouldn't there be bears here? And once it breaks through here, we trigger more bullish intentions. We've already struggled a few times when we're making new highs. We made a new high. The bears took control of the market, or tried to. They pushed it back up. The bulls got straight back up there. So you can see that if we now coil here and breach this level, that there could be a nice sequence of bullish movement. It's not going to be bearish if they get through here. We've talked about the main bear kind of area. And the main bear area, well, we've actually got two now. The main bear area is obviously down here. That's where the real bears get control, 40-60 area. But I'm actually looking at this now, 41.66, since we've bounced off it twice on the real S&P, as another sign that the bears have got control. So let's say we go from here and we sell off and we clean this level. Where's the next logical conclusion? 40.62. So there's trades in here that can possibly happen. And then if we get underneath there, then of course we've got a serious double top on our hands and things are going to get pretty real in terms of bearish pressure. But at this stage, we are pressing higher. If we clean higher, well, that should put us into the community trend line. If you want to draw the community trend line together with all of us, you go out to something like a daily. Well, daily's the best one. You just get all of the previous highs. Everyone sees this. And you basically can draw between all of these previous highs. And you'll see how accurate that's been. We've been following the community trend line. It's why we call it the community trend line for so long now. And a breach of this resistance is kind of calling for a retest of this community trend line. And if that occurs and the Nasdaq goes at the same time, and then we both hit the top at the same time, guess what? That's a good sign that the market is topping out for at least the short-term period. So we'll be following it together on this channel, but these are the type of things that I'm breaking down here currently on the markets. If we move over to the US 30, the Dow Jones, again, it was pretty lackluster yesterday. Let's go down to a 2-hour just to understand the current price action. The gap filled. It's kind of looking like a little potential left-right shoulder kind of action for an inverse. You've got a clear kind of zone that you want to breach for day traders. They want to get through this 34,100 kind of area. And if they do, you're above the moving averages here on the 2-hour now, and you're starting to say, okay, well, let's go try to test these new highs. Again, if the bears are going to get control, it's all about getting underneath this trend line on the daily. And you go back over to the daily, you just need to get a nice closure underneath this last kind of series of lower or higher troughs here. So the higher lows, 1, 2, 3. We breach that, and if we came off this level here, we get below this level. Wow, yeah, I agree. The bears are back in control of the market, especially the Dow. So we've got some clear signals both ways. We'll see how it plays out. Okay, let's begin Bitcoin and talk about what's going on the chart. So a few people are messaging me and they're saying, Tom, at the head and shoulders, why don't you mention it? Look, we've talked about the head and shoulders before, so I'll just show everybody the big head and shoulders. Here's the left shoulder, here's the head, here's the right shoulder. This is, of course, what Michael Burry's been talking about on Bitcoin as well. And it does bring up the point of, yesterday we were talking about Wyckoff theory here in this little section. And Wyckoff theory is hard to trade. It's something that you're looking at, you're bringing together with your already existing analysis and understanding of price action, and you're hoping for the accumulation. We know that we're not out of the ballpark before we get through the 42,000 towards the bull side. And why is that? Because at that point, what are you doing? You're breaching even the chance that this head and shoulders would play out, because basically you're breaching the right shoulder. So we're still in, a very, very, very tough time to navigate the Bitcoin markets. It requires that, the FOMO, the euphoria is real. I think it was a great spike to see that came off this level. But yes, I can see the head and shoulders. And the problem is, if you actually get the head and shoulders and you work out the full distance here, you'll be surprised how low this thing goes. Because this head and shoulders, if it was to play out, would be negative $5,000. Now, that's obviously not going to happen. And negative $5,000. And I guess this brings up the point of, look, even if you're shorting in a market, if you see a head and shoulders that's so goddamn large, like this is huge, huge head and shoulders, I wouldn't be looking for it to go the whole distance. What I would be doing, however, is looking for it, if it closed through, to go to the next zone. Now, what's the next logical zone for Bitcoin to be purchased at? It's going to be 20,000. So yes, if we start breaching underneath the lows that we formed earlier this week, which would not be good. So if we go underneath that 28,000, whatever it was, I think we do open up 20K. But let's go down to the 4-hour chart and just have a look at the current price action. So the current price action was very strong movement, 2 false kind of breakouts. So we had the long leg doji, we had the false breakout that we saw on stream on the smaller time frames. Had a nice little spurt for a scalp, but that's why you don't use the 1 minute chart, guys. And then it became a shooting star. So now we're finding weakness. Now we do need to find buying pressure. Buying pressure has to come in either 32 or 31K. We don't want it to get underneath that. We want this to begin the repair. So we need further buying pressure. Now, if we breach underneath this last low, it's going to be nasty for Bitcoin. And unfortunately, I could see the 20K actually hurting. So we're in the potential of a great Wyckoff accumulation. We need to start the repair. That's going to be if we can get past this 35K. Previous support becomes resistance. All we need is it to breach here. And then, of course, we can start to repair up. And this is going to be a slow strategy. Remember, if you're trading Wyckoff on a daily or a 4-hour, an 8-hour, or whatever time frame, it doesn't happen overnight. It's not what you're used to potentially in your other trading systems. And that's why when you discuss this type of stuff, you need to be well aware of that. That brings us to the end of our video for today. Of course, just want to quickly remind everybody, I'll put the link in the description below. We'll be doing a special event for Pepperstone with Chris Weston, their head of research and trading. And this will be 7 p.m. Australian Eastern Standard Time. So you can click the link in the description below. It's just basically us having a chat through AMC, GME, cryptos, and going through some really great take profit stop loss strategies as well. So if you're interested, come and join us, 7 p.m. Australian Eastern Standard Time tonight, 24th of June. Bye for now, guys.